Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President of the Trilogy Financial. On this blog, we try to take what's unnecessarily complicated back here in Wall Street, make it understandable to you on Main Street. Gave back 1.5% last week, flat for the year. Quite frankly, we've been flat. The market has been flat since October. What's going on? We've got the Goldilocks economy. It's not too hot, it's not too cold, it's just right. What do I mean by that? The labor market, stagnant, but somewhat improving. Inflation coming down. Gives the Fed ammunition to lower interest rates, and that's exactly what the market is pricing in. Did the market continue to go down? Did profit-taking continue? Or did the value shoppers come in? Here's your week in review. So we warned you last week on this blog that there were certain risks coming into the holiday-shortened week. We have geopolitical risks, rising tensions in the Middle East. That also causes rising oil prices at a 6-month high. We also talked about the risk of the Supreme Court ruling that the tariffs are unconstitutional. And as of this taping, we're still waiting on that decision. Well, the market's doing the same thing. As of this print, as of Friday morning, it is relatively flat for the week. But I mentioned on the previous segment that the market is also flat since October. But not all sectors are created equal. Small, mid-company outperforming the market. International emerging markets outperforming the market. Why do I keep saying this? It is important to have a proper asset allocation and be there before Main Street gets there. And lastly, market timing. Get your bingo cards out. It's fool's gold. Now here's what to look for next week. Volatility will increase. What do I mean by that? Over the weekend, do we strike Iran? Are these tariffs ruled unconstitutional today? I'll go to the second part first. If that does happen and the rule unconstitutional, I believe that'll be a short-lived sell-off and an opportunity for those out there with cash or proactive advisors to buy on dips. As far as the Middle East, folks, we don't know. But what we do know is this. Diversify your assets. It does make sense to have your cash out of this market in short-term CDs. Look over the weekend. If you have short-term needs the next 6 to 12 months, get it out of the stock market. That's not where it's supposed to be. Now here's your personal finance tip of the week. When I open this blog, I talk about the market overcomplicating things, and I keep talking about this term, asset allocation. Folks, remember that game, Trivial Pursuit? There were certain colors that you needed to fill in order to win the game. Well, that's your asset allocation, that's your portfolio. Be in different sectors of the market. Rebalance if one takes over the other where it comes to the set percentage. And again, consult your local financial advisor for more details. So thanks again for checking in. We'll see you next week on the Captain's Blog.